man.
More than 4 years early on 6.5-year sentence. Shaw pleaded guilty in 2022 to wire fraud for her role in a nationwide telemarketing fraud scheme. She was also ordered to forfeit $6.5 million and dozens of luxury items as restitution. According to the Bureau of Prisons, she is now either in home confinement or a halfway house. Kelly, back over to you.
All right.
Real Housewives. No, I'm not.
About 30 minutes away from
Damn, Real Housewives. Real gangster, huh?
as they spend eye-watering.
What? That's supposed to be that Italian one from the Mafia. Well, she out. Real Housewives. Real Housewives lady, a real gangster.
500% increase from just last year.
See what type of stuff you find out. Real news on CNBC and CNBC, Market News and Spectrum, man. Real world news, not just social media. IG, you gotta get your cable.
Good to have you here.
Thanks for having me.
So
this man a great investor.
To make sure that it doesn't further stoke the AI bubble here. Do you share those concerns?
Well, what's interesting is if we look at the anticipation, it's already been priced in to see a drop of 25 basis points. And as your former guest alluded to, really, I think the story here is not only the drop in the rate itself, but also the balance sheet. And so we're going to have to listen very closely to hear what Chairman Powell says to let us know, now that quantitative tightening has ended, what we're going to do in this maintenance mode for the balance sheet.
Why are you as a VC so obsessed with that, right? Like, why does it matter? Why does it?
Low Tony. I'm going to call her Tony Low. Low Tony. Tony Low. You know, I got to give everybody a nickname.
We need to understand
Michael Charles.
that happen within the entire macro, because we have moved from thinking about these typical software company investments as being discrete cash flow. They're starting to look in the public market more like utilities. They having to build out this infrastructure. You know, when you look at a lot of these companies, even Alphabet issuing about $25 billion in debt. Now we'll have to see how much of that is used for refinancing. But even in the notes, they said this is going to be partially for AI infrastructure. And it's because, as Morgan Stanley has estimated, we likely need about $3 trillion in infrastructure to be built over the next 5 years, and about half of that is going to need to come from the debt markets.
Right, but so some say
we need $3 trillion worth of infrastructure to be built out in the next 5 years, which means that you should own the stocks that own shares in the stocks that own the companies.
Do you think this is all going to look towards an AI bubble?
Well,
are play a major role in the build out, y'all. You have to own shares of the stocks of companies that's gonna play a major role in this AI intelligence and new millennium global economy. This is a new millennium global economy. The economies of the world are doing business with one another. Internet commerce, independent business owners can drop ship products to supporters and fans all across the world. All across the world, all across the world, all across the world. All across the freaking world. So you gotta understand that if you're not invested, if you don't know what's going on, if you don't understand the financial markets, you will be a consumer. And that's all that you will be as a consumer. You will be a consumer, and that's all that you will be. Good vibes, always. What a great name. You must project great energy. Like and subscribe. Thank you for liking, coming into the live and liking. I'm Santorio Hector. I'm a record producer, and I'm a self-taught investor. I trade the market. This is my channel about my real life journey, and my ambitions to become a successful trader that trades for a living and makes a living trading as well as a record producer and music publisher that produces records and seeks out artists and develops talent and then presents those talents to the world by publishing their works through my record company and my music publishing company. So go check out the records on all music platforms produced by Santorio Hector. Like and subscribe. Appreciate the likes. To got everybody that liked and subscribe. Subscribe because when we reach 1,000 subscribers, YouTube has informed me that we'll be able to monetize the channel. And I want to give back to the supporters of the channel and to the community. This channel is about my opinions and my commentary as an investor on what's going on and what's happening in the stock market. You know, in my efforts to build this portfolio and turn it into $1 million portfolio. At the same time, on the flip side, I'm also competing in my first ever trading competition, trading the E-mini S&P 500 futures, which I've never traded before. And I started in this competition yesterday. It's a simulated trading competition. There is a cash prize. They give you $50,000 to start out. So far, I've turned the 50,000 into $53,706.72. So I'm just, trying to do what I do. High 68.46 and a low 68.45.
Yes, Thursday I just made some lemonade. It's really warm in here. Like a good one. You know, my phone still works down here. It's crazy. Nice. Well, I'm trying to direct your attention to the easy money groups like the bank. Wow, the transport fuel. And even the healthcare companies do want to own stocks that will benefit from easy money.
I'm trading this competition. And I'm looking at my levels. Get in this bitch.
Conference underway in New York City. Seen a great content from there over the past day or so. Leslie Pickard is there now, joined exclusively by Blackstone President and CEO Jonathan Gray. Perfect timing as we're about to hear from the Fed. And Leslie, over to you.
Damn. I should have got in where I thought so. See? Watch this shit how this go. Should have got in where I thought to.
Across the portfolio in terms of distress versus risk appetite, and what does that indicate to you about the need for additional rate cuts in 2026?
Well, Leslie, it's great to be with you. I would say we're seeing a pretty good macro environment. When we look at our companies in the third quarter, their revenue...
Order filled.
Now watch this. That's where I got in at.
CapEx boom has really fueled a lot of business activity, particularly in the United States. Where we see a little bit of weakness is on the consumer side, sort of the middle to lower. If you look at water parks and theme parks, hotels, we do see some weakness there. The labor market has softened a bit. So when we talk to our CEOs, they say it's much easier to hire today than it was 3 years ago. And wage rates have gone from sort of low fours to call it 3% on an hourly basis in the U.S. And I think that softening of the labor market, given the Fed's dual mandate, will help them cut rates. I'd also say on the rental housing front, which is a big component of CPI, the data lags, and what we see in our portfolio is much lower inflation there as well.
That's my entry, so everything above that is in the money. Everything above that entry is in the money. We 50 in the money, y'all. Let's see, we gonna go up. 50 in the money. I'm show y'all. I'm about to scout. 50 in the money. 75 in the money. I could hit the sell 100 in the money. 125.
Those concerns from getting out of control.
Yeah, I would say it's really about the U.S. economy and the labor market, and I think they're likely to cut rates because there are parts of the economy that are more tied to capital
Come on.
intensity, housing in particular, commercial real estate construction, some of those areas that, lower rates would help. Certainly, they would help consumers, they'd help companies. Again, I think the good news is the inflation data with a lag here will be supportive of those cuts. And so, as investors, an environment with a pretty resilient economy,
Look at that bitch. Look at that bitch dip down. Yeah, 125. We drew down. We drew down. We drew down. Shit.
Lower rates, of course, bode really well for private equity deal making, but it can also be a headwind for some other businesses, namely in credit and insurance. How are you thinking about the impact on spreads going into next year that you will be able to offer investors?
Well, I think the key thing for what we do in private
That's why you gotta be
credit
quick. Drew down. I was $125 in profit. $275 in the hole right now. But I know the range is getting ready to go back up. Man. That's the low. It just hit the low range for the day. So I'm wait, cause I'm going. We gonna get back into the money.
And that I feel very good about because what you're basically doing is bringing those investors right up to borrowers. That's what private credit is all about. It's a little bit like
we about 12 ticks from my entry in the opposite direction at $12.50 a tick times 2 because it's 2 contracts.
Because it tends to be less leverage and better match funding in terms of duration.
And yet the space has seen so much noise in the last
I don't be scared in a trade. If I'm a trade, I'm a trade.
There was a filing out from B
I see
semi-liquid product in that space.
right here the sellers is strong. Look at the numbers, the higher numbers right there. Oh, look, on the higher numbers, we gonna push back up. This is how I read the Fibonacci from right here. And these numbers on this side get higher than the sellers is going up. Look, as the numbers overcome on this side, it's going up. Look at the numbers. These numbers gonna be higher than on this side. It's gonna push up. If this number higher is pushing down, because it's more. That means it's more. The sellers is more powerful. Boom. I need to get to here and in the profit. So I read Fibonacci. This shit is very, very, very liquid in the fucking American trading hours. I trade Asian, European, Comex, Globex, overnight, whatever you want to call it, whatever the pros call it, the Asian European session. I refer to it as the Asian European session. Hong Kong and London, and they trade a little bit different than Americans and Asiatic traders. They known to be notorious scalpers. Americans want the long ass. They be going to smack. They try to lick on 100 ticks. Every fucking trade, they want 100 ticks. Fucking stop quick. We got 100 ticks, baby. Look at the Fibonacci battles. Fibonacci battle. The candlesticks. The candlesticks going in, they're coming out, they're going. Candlestick going up, candlestick, more powerful. Well, candlestick. Look, the numbers over there higher. Pushing down, these lower. Look as the numbers get higher on the side, higher push up.
There's $60 trillion spent annually on labor. If you make that 15% more efficient, that's $90 trillion a year. So investing a lot in chips and
What's up, Herbie? You having a baby?
makes a ton of sense. So from my standpoint,
Oh, you talking about the market?
how do we invest against this mega trend, but do it in a way where we don't take too much risk? So we leaned into being the biggest investors in
Oh, I know how to get out.
doing it in the U.S., Europe, and Asia, but doing it in a
They
safe
they
way.
they doing a sweep. They doing a liquidity sweep. I don't put no stops. They ain't finna stop me
You're
out of
not betting
nothing.
on who the winners are. You're betting that
I'm trading off of money. I'm trading at this point with money that I won anyway.
so you invest in generation,
I'm trading with money that I made out the market.
utilities,
Technically, if you
focus on how I can capture this mega trend. And then yes, you do some investing in large language models, application software,
you
promising
down 275, but I done produced 3,000. I done turned 50 into 53,000. I done turned 50,000 into 53,000. So I'm trading with profits in essence. So I'm still ahead in my objective in the competition, which is to be a successful trader and not blow up my account.
All sorts of businesses. If autonomous vehicles come, what does that mean for auto insurance?
I know, I know the range. I know the range. I'm looking at the range that the market opened and closed in between, and that's what it been floating in between. The volume 219.
This is going to be profound, and as a firm, we're very focused on protecting our downside, but capturing the upside for our clients.
Yeah, we've heard a lot of those themes today and yesterday at this Goldman Sachs conference. John Gray, President Blackstone, really appreciate your time today on this very important macro day as well.
Great to be with you, Leslie. Thank you.
Alex, and back to you. No one can hear and talk about
It's all about patience.
Leslie, thanks very much. Thanks to Jonathan as
You
well.
can't, if you panic in your trade, it's all about patience at the end of the day. The S&P gonna hit 7,000. It's gonna hit 7,000. The S&P gonna hit 7,000 before. I swear to God, I can't wait to get some real money. I'm taking me a 2 year. I'm taking me a 2 year option contract. Say the S&P hits 7 racks before Donald Trump leaves the presidential office. The before Donald Trump leaves, the S&P 500 gonna hit 7 bands. Stop playing. Hello, Mr. President. That's how I'm gonna tell my fine. I'm gonna have me a fine ass female assistant or my wife, cause I'm gonna trust my wife, baby. I'll take this over to President Trump. It's a donation. We're gonna end up invited to an event somewhere right here. I'm gonna be. I am one. As a businessman, as a younger businessman, I already received congressional appointments from the Republican Party. I don't talk about a lot of stuff. I'm a New World Republican. I'm definitely not a Democrat. The Democrats not to be trusted, bro. They're worse than the Republicans. They want to keep people poor so they can solicit the government for money to claim that they helping poor people and just skim the money off the top and help them in their own, help them and their families. They get money for job training. They only train people they know. They only let people that they know and people who are friends of their friends get into the apprenticeship programs, and they control government funds, and they utilize these government funds. They create nonprofit organizations, and then they put people in place to run them, and they just basically steal from the government, never enabling and helping the poor people that they claim to represent to become better and to be better and to do better. Because if that's what they really wanted to do, they would have been developed. How come no African American brothers and sisters until Troy and Rashad and Ian, until Earn Your Leisure, until Wall Street Trapper, until Aristotle, Honey Drip Entertainment? Nobody was trying to teach financial literacy to people of color. Period. not people of color who were in the world of finance. In the world of finance, the people who really run the world of finance have been nothing but open to it. Hell yeah, bring more dumb money into the market. You know what I'm saying? Because that's what they feel is dumb money because you don't know and understand investing. So you should want to understand and know and understand investing. You should definitely want to have financial literacy. You definitely should reevaluate your assessment of President Trump. I mean, because the objective of anybody in a position of power, and if you say this, you're a lie. If you're in a position of power and you don't utilize that position of power to put you and your family and your loved ones in a better place in the world and in the future to come after you left here, but you could go to your grave like, God, I tried to be a good person in the world and help other people. And not only did I try to help other people, I lived a righteous life. If I was living a wrong life, I did a 360 and turned it around and changed my life. Um, I told people about you, about that, they should try to, reach out and understand and build a relationship with the Creator, the Lord of the universe, Jehovah, Yahweh, Yeshua. It's not for me to judge your faith or your religion, but it's only one true living God. You know, we live in a capitalist society. Some parts of the world practice capitalism, others practice socialism. No group of people should force their beliefs or ways of living upon another. You know what I mean? And the world has evolved and technology has expanded to the point that we now participate in global markets and global business transactions and there's global commerce going on that has been created due to the advent of the internet, um, social media, live streaming, and the markets and business. And everybody has an opportunity to create a product, develop a product, and create a global marketplace through your website and to sell to people all over the world. Drop ship your product, have a company that manufactures and drop ships your product on demand as ordered. I mean, what is your passion in life? What have you had any desire to be successful at anything? Sometimes we redirect our ambitions or what we initially saw ourselves doing if we understand and realize that maybe the creator created something else for us, something better for us, something different, and then we just tap into that. We tap in and we tap into that. You know what I mean? Or he utilizes your ambition and your platform to be a tool to create change. I gotta get out this simulated trade and get back to the real markets. Shit, I'm in the competition, so the winner of the competition wins money, a nice substantial amount of money. So I'm taking this serious. Like I'm trading real money as far as I'm concerned, because if you win, it's real money on the line. So I'm trading this competition like I trade with confidence and with caution. Um, Looking at my close and my open. They on some stone cold raw liquidity sweep. They sweeping way below the close. They sweeping way below. They sweeping way below the low. Yeah, that's a liquidity sweep. That's why I don't play with stops, bro. Cause look at the low. The low was 68.47. They had 68.45, 64. 400 ticks down. They definitely want to stop you out. Most people don't want to draw down $300-400. They're gonna get out the trade. I went down $1,000 yesterday. But it's gonna go back up. Looking at the Fibonacci, see?
The premiums remain unreasonable. We just didn't need the coverage anymore. Don't sell or lapse your policy without going to abacuscase.com first. There are no fees and no obligations. Get the real value for your life insurance when you need it with Abacus.
Watch this.
I like the way this all fits.
I can't.
We're watching, Mary. They're right. We need weather time.
I thought they only make floor liners.
Really, Mary? Really, Mary? Who do you think makes the seat protector, side window deflectors, no throw left
And we're cup foam.
and
It's a deep ass liquidity sweep to stop people out. That's long in the S&P. Micro. That's long in the E-mini S&P. Oh shit. Damn.
Makes a call to likely lower interest rates or does not. The odds of a rate cut just under 90%. So the market is expecting a cut. So if we do not get long stocks, they could fall. Or if we loss, we've got all
Y'all still here? Oh, I got sidetracked, y'all. At the same time, I'm doing what I do. Y'all know I be moving around, making moves and whatnot. Making moves and whatnot. The was plot, the what got, the was hot.
Well, it's now in the green after this move up to possibly have a 13-day stretch. It would be its longest in about 8 years, so that's meaningful. We also have silver and gold on the positive and on the rise. Jim Carrey, I'm just going to bring you in on this because it seems that I think John Stone's obvious phrase captures this perfectly. That he calls it, says the regal vigilance.
New highs, man.
Big headline for a lot of people, even those who are more bearish on bonds, is the Fed's
So
back
that's the
on
new,
and they're doing so. Maybe it's just
the new high and the new low.
action is now coming a little bit more quickly than people thought. What does it tell you?
Hey, Kelly, listen, I think that's a great.
Come on, take it back into some profitability.
A more dovish meeting. Now, yes, it is true, and I would really say that this is ironic, right?
What's up, Herbie?
I see the irony in this. The Fed is basically
Herbie.
raised the bar for the next rate cut, right? So we still think they're gonna cut, but it's gonna be a higher hurdle for them to do that.
Order filled.
Hell yeah, let me get the fuck about that trade. That motherfucker was like, what?
People thought was gonna be early next year to actually what was
Order filled.
Right now here in December. The Fed is basically telling us that they want to have pro-cyclical policy, meaning they want to support the growth.
Now we wait.
They're to stand at the ready to cut interest rates if the labor market deteriorates further. And at the same time, they're worried about liquidity. They want to add liquidity back to markets, call that reserves, call it what you will. The point, though, is that we need to get over the year-end turn, right? So
You're gonna compete, you gotta compete to win.
and the Fed wants to
I'm trying to win this competition.
So
I
now,
ain't gonna lie.
the fact that they're willing to start to inject this liquidity, worry about reserves, and that's a lot of it's going to maintain, I think, some of the bullish sentiment in the markets, which is what we're seeing reflected, is actually the net dovish component, even though they raised the bar.
Well, also, Jim, back to you, because a lot of people are listening or watching at home with, all right, this is great, what do I do? Well, to Kelly's point, the NASDAQ ticked up, the XLK on pace for its 13 straight day of gains. That would, I think, tie for an all-time record, at least going back the 8 years. Why did stocks move up if prospects for more rate cuts went down?
Yeah, so effectively, one of the big concerns that was in the marketplace was that the Fed would have very inflationary policy, that they would be dovish, and that they would push these long end rates higher because whoever the next
Down
cashier
there,
is,
liquidity sweep shit again.
a lot. What the Fed is telling us right now is that they're not willing to do that. So what that's doing is it's stabilizing the back end of the yield curve. It's allowing the equity markets now to say, oh, we don't maybe have to worry so much about this inflation impetus that might come out of a Fed that's too dovish. So again, ironic, and that is actually something that's very supportive for the equity markets if rates stay relatively stable and well contained.
Yeah, and Steve, you want to jump in here?
Yeah, I wanted to back up what Jim was saying about the dovishness of the balance sheet decision. We asked in our Fed survey, which we released yesterday, about the balance sheet expectations, and it was for purchases to begin again in April, so this is quite a bit earlier, and for purchases to average just about 28 or 30 billion, so this is more than that. So on that front, for sure, I would also point out that when I'm looking at the immediate reaction of the market, it's a little bit more dovish in terms of that next rate cut. We had it more fully priced in for June before the statement came out, and that was about a 57–58% probability for April. That's going to bounce around. And all of that said, this entire discussion I would point out maybe off the window next week when we get October and November employment numbers as well as some inflation numbers, and we'll figure out if the Fed made the right call here and whether or not the forecast is worth either the paper that was used to print it or the digital space it's taking up on the web.
That's an excellent point, as always, Steve. Lisa and Francis, the Fed has two mandates. I mean, people forget about that. We always talk about inflation, because of what happened during COVID, the prices spiked, inflation was 9%, blah, blah, blah. But they also have the jobs mandate, maximize employment. The jobs part of the picture, vis-a-vis what the Fed may or may not do.
And I've been thinking a lot about this because I keep wondering to myself, how can you be cutting interest rates when inflation is this high and for our forecast going to be heading higher? In fact, it's really hard to see when that next cut is going to come through. I have to agree with David here. When is the window to do that? Because by February, we see that inflation side moving higher. And yet, Brian, this is not interest rate driven inflation. This is tariff level inflation. This is inflation that is coming from a labor market that is shrinking.
Order filled.
And part of me wonders if the Federal Reserve is saying our interest rate policy is far less relevant to the inflation side of the picture than it is to the jobs.
Okay, let me follow up with that.
Order filled.
I hate to say this. Do we ignore inflation? If exogenous factors, tariffs, whatever, are contributing, labor costs during COVID, whatever, if they're contributing to inflation and there's nothing the Fed can realistically do about it, should they cut rates anymore at all?
Well,
why not raise rates?
Here's the rub here. The problem is if they don't actually contain inflation, it can spiral out of control. So you start with tariff level inflation, you start with some wage pressure that sort of creates a corner. If you don't respond to it properly, if you're too easy, then that can start to spiral. But there's another elephant in the room here, which is that we have phenomenal amounts of fiscal spending. And how funny it is to me that we spend so much time attributing monetary policy to inflation, and we forget that expansionary fiscal policy is also very inflationary. So the forces on inflation are wide-ranging and shouldn't just go to the Federal Reserve policy. So it's not a surprise to me that their bias is towards labor mandate.
Well, I think the other part is not only that, is how high the equity market is being. This is the end of three booming years for the equity market. And I personally don't think the Fed ought to be cutting aggressively overall right now, but it's not because of what they're going to do to inflation.
So you would have dissented.
I would have dissented, I would have voted the way with what I said, because the problem is that they have caused asset bubbles over the years by keeping rates at an unrealistically low level, and I think the danger is they're just going to cause another asset bubble, and when these bubbles burst, they cause tremendous damage. So there's nothing wrong with a federal fund rate
I'm in the competition, baby. I'm competition. Don't act like a new trader ain't competition. I turned 50,000 into 55.
short-term rates, and if you scare people about inflation, or indeed if you cause a booming stock market, that actually will probably help.
Second day of the competition.
Anyway, why do we have
Second day of the competition, baby. I'm in this competition to try to win it, not just.
Order filled.
I'm going to paraphrase
Order filled.
Scalping ass master. You can scalp this fuck out this market. They on deep liquidity sweep. This shit is for real. They like, psh, I bet you motherfuckers be losing a shit ton of money. I trade two contract, get some like four contract. I can stand the tolerance of what it take to go down. What you gonna make off these bitches though? Yo. The Iron Vice work raw in the futures. You just trading the trend of the Fibonacci. This shit is stupid liquid. Look. When they push the market, they push it. They push it hard and fast too. In both directions. This is a real battle. This shit right here like warfare. It's guerrilla warfare. Futures is guerrilla warfare. This is only for the truck fit. Like this for you gotta be truck fit to do futures. No wonder people don't fuck with this shit. They change moment to moment, but the next meeting that even is close. Motherfucker don't fuck with these futures. They're like, hell nah, they ain't getting right. Back to you.
All right, Greg, we really appreciate it. I think it's a good point to make that as this kind of settles in for the past 20 minutes, markets are looking a little bit more on the
damn, look at that liquidity.
Although equities are still near session highs. Let's talk more about that now. Jeff Gilbert, he's the founder and CEO of KK.
I've been watching this shit, and when they do liquidity sweep, they sweep fucking deep. Damn, fuck, they sweep deep below the low. They go deep below the low. You got to put your stop 10 ticks, 15 ticks below the low. Don't worry about that shit. It's gonna go up. Look at the low. Look at the all-time. Look at the all-time low. Look at the low and the levels of the range for your week, your month. You know what I'm saying? See what the range for the past week, what it been bouncing in between. Trade them shits. Trade in between those levels. Scalp in both directions. This is how Asian traders. This is why, and this shit is too. This shit's scary right here. Man, I bet you real traders be tearing their ass up in the Asian, European futures. Cause this ain't shit. The liquidity ain't shit like this. That shit so probably. That shit when the liquidity ain't just rapidly. When the Fibonacci is moving slower, you cause damn near if you read Fibonacci counters, ain't no way you should make money in a less liquid market, in my opinion. It's just the move might take longer, way longer. Trade on a 5 hour on a hour 5 hour. You know, it take me 2 hours. Might take an hour, 2 hours for your trade to get in the money on the Asian European futures. You making money, shit. If you trying to make $1,000 a day, nigga, and that's what you do, nigga. You gotta make your money. Sit, nigga, put in your work. Shit. Yeah, these motherfuckers ain't playing. I went and looked, and I'm trying to get on that leaderboard to this contest, and I'm not trying to do it by competing with the other traders, but I just want to compete smart and trade with confidence and caution, and you know, I'll get my recognition. This trading competition is a real time lesson, and I wholly know how to I could trade futures or forex now. Now I know how to read the levels in futures to take the stops, and if I want to put in stops, I wholly understand and know how to do it. Stop, yeah, it's all good. It's all good.
You don't want to go out doing something that causes the stock market to go down or wobbles or whatever it might be. I
This shit is
think you
real.
want to go out, particularly when you're being attacked by the president every week. You want to go out kind of on top, and I don't think it's unfair. I know it's the Fed, but these are human beings whose heart pump blood. I think there's probably a feeling they want to feel good and go out like a hero.
We're getting closer, closer to this. I think Powell is going to cut. I think he's going to cut.
And that's where I really want to unpack the better understanding. Why do they do more than 25 basis point expectations?
Ooh, we down. We down. Nice as a change.
Maybe they did. Maybe it's just a tool for, the banks have been having a hard time. Jeff, I don't know if it's an all-time high,
Right,
I know, sarcasm.
Like Kelly, think about it. Every time they cut rates for the S&P near 2% or less high, when we're supposed to be all-time high, the times they've cut it has been 20 times. Guess how many times a year later the market's been higher? 20 times, 20%.
And that's what we talked to Tom Lee, earlier on, who said he said even if it's a hawkish cut, he would view that as kind of a bullish outcome or a bullish signal. So you have to imagine that this leaning more in the direction towards accommodation.
Seems dovish.
Even more so. Yeah. Did you do anything else now to change your thoughts prior coming into this meeting or not?
No, I think you have to really focus
Like and subscribe. Like and subscribe. What's good?
Speaking of, let's take a very short break, folks. One small commercial break. Come back with final comments. Then that.
Good vibes, Herbie.
Maybe they get answered by those three flags. Okay.
Trading competition. Trading competition.
A nation isn't just built.
It's powered
By people like us.
last year's Chevrolet.
I'm in a negative drawdown right now. We down $900, but we still up because I turned 50,000 into 55,000. Damn, now we down $1,200.
Right here at home. We put in the work.
Because America depends on it.
Learn more about the hands at work powering America.
Some people like doing things the hard way, like doing your finances with a spreadsheet instead of doing it. Working pulls all your financial info together in one place and updates it automatically. How easy is that?
I can't believe we didn't use that couples therapist sooner. And this therapist will take our terrible insurance out. People say that even worse makes them feel comfortable.
So isn't that a certification in counseling for high-achieving couples?
Well, you've got options. Look down.
Franklin Templeton ETFs. With over 70 ETFs.
I do this shit for real. I'm so raw with this shit. I'm so confident in my trade. I ain't stopping this shit. I'm down 1,500. This shit, I don't buy this shit at all. I believe in my trade. I look at the levels.
Are really about supporting this platform shift. With or without agentic AI.
They ain't doing nothing but sweeping deep. They start trying to stop people out for the. I know a lot of pro traders that don't trade with stops, man.
It's only a hype. It's only made possible by Spectrum Business connecting healthcare providers of all sizes. Like hospitals relying on the Spectrum Fiber broadband network with industry-leading reliability. Practices keeping patient data safe with advanced security. Pharmacies accessing records in the cloud.
If the bitch ain't about to reverse all the way back out on you to the lowest levels. And I ain't saying it can't do that. Because it totally can do that.
All right, welcome back to Power Lunch again, minutes away. You referenced, Kelly, the XLK tech ETF. Why?
There's a couple of reasons. I mean,
Oh, it's minutes away from the rate cut. Might have been a bad badass time to get in a trade, nigga. Shit, I should have took my money. I lost 13. I'm down 1,300. This motherfucker about to announce the rate cut. The market goes stupid to crash out.
Small caps will have to check out as well. Those surged to an all-time high. Fillmore was part of that trade. The Dow was up as much as a little more than 300 points moments ago. Fillmore gets up 206. So you see the potential for this market to take this a direction, but it's going to be really important how Powell emphasizes
I ain't about to get. I don't see the trade reversing like this. Especially if he cut them rates. That bitch gonna go up. This bitch gonna soar. This bitch gonna soar. He cut the motherfucking rates.
So, to your point about 20 times out of 20 times, by my math, and I went to an engineering college, that's 100%. It is. That stocks are going higher over the next year on this time.
Hell yeah, stocks going higher. Hey, the Fed chair be a dog if he don't cut. They talking like he cut this shit, like they know it's cut. Is he gonna cut? He's gonna cut. I feel like he gonna cut. They might not cut in January. Or in June. What is it, June? When is the next cut? In June. In June. The next cut is the next proposed, the next opportunity to possibly get a cut is in June. And they probably won't. And you know, the market in June, hopefully the market is excellent and the economy is great. The Fed chair. He at the Ooh, look, they selling this shit as soon as he stepped to the fucking thing for no reason.
And stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point.
Quarter point. Cut.
We also decided to initiate
market about to go up.
Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some
got the rate cut, baby. Got the rate cut, baby. This bitch about to go crazy. Got the rate cut. Got the rate cut. Got the rate cut. Yeah, got the rate cut. Got the rate cut.
But these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September.
Good GDP outlook.
Although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to...
Order filled.
The official report on the
September, the most recent release showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly earlier in the year. A good part of the slowing likely reflects the decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well.
Order filled.
Less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly
Order filled.
in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Very little data on inflation have been released since our meeting in October.
Order filled.
Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%.
Yo,
In the near
bitch.
term, risks to inflation are
Greedy
typically
motherfucker, you.
and risks to employment to
Stop
the
doing
downside,
that.
a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach
Order filled.
to both sides of our dual mandate.
Bitch.
Accordingly, we judged it to lower our policy rate by a quarter percentage
Oh,
point.
shit.
With today's decision, we have lowered our policy rate 0.75 of a percentage point over our last 3 meetings.
No.
This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, evolving outlook, and the balance of risks.
Order filled.
In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening of the money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that
I'm doing my 1-2 in this trade competition.
Order filled.
at today's meeting, the committee decided
Doing my 1-2 in this trade competition. Turn 50,000 into 57.
of maintaining an ample supply of reserves over time. Such increases
doing my 1-2 in this trade competition. Like, let me go see what the real market is doing while I'm killing them on a simulated trade.
Including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, but the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate.
Download the albums on